Okay, as you know, and I announced we're going to do this kind of like in a fireside chat format. John would prefer that you ask questions and that he answer them as opposed to give you a presentation, a canned kind of presentation. So I sent you some articles, and you were able to look at those, get an idea, come up with some questions. We do have 4 people with microphones, and just raise your hand. We'll get a mic to you. We do want to record your question. It makes it a lot easier so we don't have to repeat it, plus it's historically that we have that information. So with that start, we'll go ahead and open the floor to the first question. So if someone would just raise your hand, we'll get the microphone to you. Oh, everybody wants to raise their hand at once here. I know you all have 5 questions, so we should have some questions here. Oh, there. Laura?
Hello, Mr. Rogers. My name is Andrew Chernesky, and I'm a sophomore in accounting. I have a question for you about investing. So if you were a student in our shoes, interested in value investing, what would be your process for finding, narrowing, and selecting stocks to invest in?
I think thanks for the question, and I'm very happy to be here. It's exciting to be here. I have so many friends who have graduated from Notre Dame and just never have had a chance to come and speak with students here. So again, I really appreciate this opportunity. For number one thing, I think, for picking stocks, whatever strategy, but in particular in value investing, you want to stay within your circle of competence. I think Warren Buffett talks a lot about that. In understanding the businesses that you invest in, things that you have a natural comfort level with, naturally good instincts around, you'll make better decisions. And you'll make better decisions, especially when it matters. So, all of us went through this extraordinarily difficult environment in 2008 where stocks were cratering, there was an enormous amount of fear, Wall Street analysts were all capitulating at the same time, they were scared to death, hedge funds were influencing them and making these dire predictions about what was going to happen. And if you didn't know your company's cold and didn't have total confidence in your understanding all the fundamentals and building the relationships with the management teams, you couldn't have stayed the course when it was most important to stay the course. And you had to be willing to buy more while everybody else was totally afraid to buy. And that was, I think, once in a lifetime kind of an opportunity, but it just reinforces, if you're a value investor, having that confidence in crunch times, I call it, is really, really, really critical. The second thing I think is also critical is that you want to have a sense of how well understood your company is. We're always asking ourselves at our weekly research meetings, what is it about this company that Wall Street doesn't understand? And when we talk with management teams and CEOs and CFOs, we're always asking them the same thing. Tell us what you think Wall Street's missing in the analyst reports that they've printed. And because the markets are so extraordinarily efficient, if everybody understands how great the company is, as you know, the price will already be reflected in the company. And so as a value investor, you have to be willing to go in there and be confident you can buy those stocks while everyone else doesn't understand it as well. And you have a keen insight that other people don't have. And the final thing I would say is that Warren Buffett is the best investor of all time. Part of it, he has this vision. He can see the future with more clarity than anybody else that I've ever been able to see. And it's that intangible quality that he has to be able to look 3, 4, 5 years out and understand whether the brand is going to be strengthened or weakened, whether the moat around the company is going to be larger or smaller. And so being willing to sort of look out over the horizon and have vision about the future is critically important to be a value investor.
Okay, our next question is ready. Please, your name and your major, too, as well, you're talking.
Good morning. My name is Blas Moros. I'm a finance major. I was wondering your thoughts about James Barksdale's fiber optic cable and the impact that might have on high-frequency trading.
I missed the first part of the question.
James Barksdale's fiber optic cable and that impact that it might have on...
I hate to say I can't help him on that one. I'm not familiar with that company.
Okay. I'll pose another question.
Okay.
Hold the mic a little closer so we can hear you better.
Okay, next question. Your education initiative, I was wondering how far you'd want to take that across the country or across the world, and how important that is for you and your company.
Well, our Ariel Education Initiative has been very important to Ariel. It's helped to define our culture around a company that is not only about excellence in delivering excellent performance results to our customers, but also that we have a conscience, that we care about strengthening our community. And I think that it's made us, again, not like the typical LaSalle Street firm in Chicago. We're very different, and we hope that it makes our firm more attractive to young, talented people. Because people come in sometimes, I think, and I know, I think your generation, you care a lot about the community, you care about giving back, making a difference. So hopefully, because we have a firm that has that as a part of our culture, we'll attract the best and brightest to Ariel. So that's one of the reasons it's really important. Of course, it's important to those kids in the community, and it's been a wonderful thing to watch the young people grow up and get exposed to the stock market. And we've had actually several of our graduates from the university, from the Ariel Community Academy, have gone to the University of Chicago Lab School, where I went to for high school, and they've been able to experience that great, great institution the same way that I did. How we want to roll it out, when Arnie Duncan, before he became Secretary of Education and before he was the school superintendent for the city of Chicago, he worked at Ariel for 6 years and created our Ariel Education Initiative. It was really his vision to create the new small school, make it a public school, have extended day. And before he left to go to Washington, we had been going around and meeting with financial services heads, the CEOs of some of the banks and hedge funds and private equity firms and mutual fund companies in Chicago to see whether they would partner with an intercity public school the same way that we had. And I guess it was good news and bad news that Arnie got the big promotion to go into President Obama's cabinet, so we haven't been able to fulfill that vision in Chicago so far. But we're hopeful that he'll be able to take our program nationally now that he's there. And I know he has a dream around financial literacy because he thinks it's so important to make sure that young people are exposed to the stock market, are comfortable in investing. Because as you all know, when you get your first job, making the right decisions about your 401k plan is critical. Not only getting into the plan, but then picking the right funds, having the right diversification, not taking money out too soon. All those things are going to be critical for the next generation to be able to retire comfortably. So he agrees with me that it's really a hugely important initiative to try to get public schools to believe in financial literacy. So it's a big passion for us. But so far, we haven't been able to convince many others to do it. We've had a few people who are helping us, partnering with us in various ways, but not anyone else that's taken on a public school the way that we have.
As an extension to that question, you are noted for your biggest political achievement to have an automatic enrollment in 401k plans, which was part of the 2006 Pension Act. Could you describe that process a little bit, how you got involved with that, and why that you are noted as the person that was behind that portion of the act?
Well, I think why that happened, because actually I have to say that I think the reporter did not do a very good job.
Okay.
As you guys will get into your careers more, you'll find that the press often is not as informed or as thoughtful as you would hope they would be. And so I think they exaggerated my role dramatically. I think where it came from is being on the McDonald's board. I'm on the compensation committee, and it's been a great place for me to talk to the McDonald's heads of their, the head of their 401k plan and the head of their personnel department to say, have you looked at the participation of your minority employees relative to white employees? And originally when the data came back, it was dramatic. The African American and Hispanic employees were dramatically underinvested and undersaved for retirement versus the majority community. So McDonald's being McDonald's, they care about their employees, and they really went out and revamped their 401k plan, revamped their marketing materials and communication materials, created opportunities for their affinity groups to have educational seminars, to be able to inspire people to save and invest and get involved. And so they have dramatically increased the participation of minority employees in their 401k plan. It's really a great success story. So I think because I was able to help work with McDonald's to improve their processes and work with Hewitt, their consultant, some of the things that happened in Washington, they gave me partial credit for, which I'm not exactly sure why.
Next question, please.
Yeah, Tim Chapman, MBA program, first-year student. Nice to have you here. Thank you very much. In some of the read-aheads today, it talked about the fact that you don't have junior analysts do a lot of your research work, that your actual advisors and managers do all that work. You just mentioned about trying to attract some of the bright young talent to your organization. So what type of roles do you have for some of us that might be looking at joining a firm like yours?
Well, there's, one of the things about the firm, we have about 75 people at Ariel, and it's a very diverse group of people around a diverse group of tasks that we have to deal with. Having a mutual fund company that's competing against Vanguard and T. Rowe Price and Janus and Fidelity and all the big guys, we've got to be very innovative and creative with our marketing, how we build our brand, how we do our advertising, how we communicate with shareholders. So there's a whole lot of fun jobs that I think that are there around marketing, and where people can really get in and make a difference. Of course, we have a sales team that calls on 401k plans and corporate pension funds and college endowments. So there's a direct sales roles at Ariel that we actually have. Cheryl, who's here with us today, graduated from Princeton last year. She played on the basketball team, and actually they won the championship. It was great. And she's joined us in our sales effort, and so we were really thrilled that she would come back after her summer and join us. So those are those types of jobs. When it comes to the investing area, a lot of younger people come and join us for a couple of years and then go off to business school. And those early jobs are really a lot of data gathering, making sure that we're investing the portfolios consistently with what our customers have asked us to do. And that's kind of the way that people get involved on the research side, is making sure, again, that the portfolios look alike and live up to the goals that we're supposed to invest in. And then also, after they've been there for about a year, they start to be kind of junior analysts, working alongside our senior portfolio managers, going on company visits, being on the conference calls, helping to go out and gather data that a lead person might ask for. So like David Maley, who's here today, is a Notre Dame grad and runs our microcap product. He would have a younger person who would be there to help support him in the work that he does. And then finally, we have trading, we have legal, we have compliance, we have all kinds of regulatory issues you have to deal with in our business. So there are jobs there for people who might care about compliance and the law. And we have a finance operation, CFO, and people underneath. And of course, we have a big technology department. So there's people who are interested in IT, and we really feel like we're pretty sophisticated for a small firm. So there's a lot of opportunities for young people.
John, you introduced some of your team. We want to introduce all of your team that came with you today? So
I think the only person I didn't introduce was Dorian. He's my assistant. So you guys want to all stand up and wave?
Okay, the next question. Thank you.
I'm Brandon. I'm a sophomore finance major. And I had a question because it seems like you have a lot of experience in various fields, such as investing, and in college you were heavily involved in sports also. What parallels would you draw from all your experience, and if you had to choose one thing that you always look towards, regardless of your endeavor, what would it be?
Well, I played for a great basketball coach, Pete Carrill, who was at Princeton for 29 years, and now he's the assistant coach at the Sacramento Kings. And I tell people there are several things that he taught us that are relevant to our business, and we actually have a conference room at Ariel called the Pete Carrill Room. And underneath the heading on the plaque outside of the office, it talks about teamwork. And he really made you understand the importance of helping your teammates first and not thinking about yourself first. And it's a cliche, all coaches tell you that, there's no I in team and all the rest. But he really made you understand that it was unacceptable to care about who scored the points. And it was such a pleasure once you learned to play that way. And it was so different than the way I'd played in high school, where I could tell you how many points I had at halftime, at end of third quarter, and I kept my scoring average on a little sheet of paper, and I knew exactly how I was doing. And then when we got there, you just sort of, again, if you could help your teammates be successful, you got as much pleasure doing that as scoring the points yourself. So I've tried to bring that to Ariel in that you wanted to create a culture where we're all in it together. Everybody's a shareholder at the company. We have all open offices so everyone can see everybody. If we go on retreats for departments, we bring the whole department. We really think you can get great ideas from everyone. And you want to create this inclusive team-like atmosphere at the firm. It's hard. It's harder to do that in a business setting. And it's harder to do the kind of things you can do in sports where you can sort of bench somebody who isn't acting appropriately and bring them back a few more days later and things like that. You can't scream at people the way Coach Krill would scream at us. And so it is tougher to get done. But so the teamwork thing is I start with that. The second thing is that he was known for is precision. Any of us that played for him, and even the people who played for the coaches who've come after him, because they've been mostly former players, we all have exactly the same footwork because he demanded precision on everything. Every pass mattered. If you threw it right here, it was a good thing. If you threw it an inch too low, he would stop practice and scream at you because of the imprecision of the pass. Again, every cut mattered. Just every detail mattered. When you were on the court for practice, you learned to concentrate. So I think it's relevant to business, especially as a value investor, that you execute your investment strategy with precision. You don't sort of find excuses to sort of meander off and do something outside of your circle of competence, or buy a stock that's not a value, it's really too expensive. Making sure that you've done all the homework and crossed all the T's and dotted all the I's on making sure that the work on the PMV, trying to figure out what the present market value, the private market value of the company is, with the discounted cash flow analysis. Just precision matters in everything that we do. And I'm constantly reminding people, because a lot of people just are not used to that. They think, well, I can do 9 things right and make 9 things right out of 10, and the one mistake isn't so bad, and why aren't you happy with 9 out of 10? Well, I was trained to say that everything mattered. And so I know it puts a lot of pressure on my teammates, but I can't overemphasize how important that is. So I would say the teamwork and the precision are the 2 things that Coach Krill taught that have really carried on to the rest of my life that I think has made a difference.
Okay. Young lady in the back here, the green sweatshirt.
Hi, I'm Veronica Pedroza. I'm a senior accounting major. My question is, were you ever worried that the company wouldn't survive when it was at its lowest point? And even when the company was at its worst, why did you choose to pursue the risky strategy of only investing in small to mid-sized firms?
I'll try to answer it 2 ways. There's sort of 2 periods which are really rough. One was right in the beginning. After we'd been in business for about a year, 15 months, we weren't making any money. We had very few clients, and you didn't know how you were going to be able to get those new clients. People weren't that interested in hiring a 25-year-old at the time. After I'd been, started when I was 24, they weren't interested in hiring you to manage their money without a track record. And so we had to stay alive long enough to build a track record. And we were out there paying rent, a couple of salaries, travel budget. It became clear we were going to run out of money way before profitability kicked in. So there was some fear that maybe this isn't going to work. But the fortunate thing was that I had a lot of friends and family and board members who believed in us. And I went back to all of my original investors, and almost everyone kicked in and gave us more money to keep the business alive during that really tough period in early 1984. The next big challenge came, I guess, 24 years later, was this unprecedented 2008 crisis that occurred, and we all were there. You all read about it, and we've studied it. Bear Stearns to Lehman Brothers to the credit markets freezing and the stock market having the worst decline since the Great Depression. It was extraordinarily disheartening. And as you imagine, I think you guys all know this, I'm in a business where clients don't act rationally. It's that weirdest thing. Clients always want to take money away from you when you're underperforming and give you money when you're outperforming. And they should be doing the exact opposite. everything else in life, people like to buy bargains. And Warren Buffett talks a lot about it, but for some reason in our business, people like to sell their bargains and buy things that are expensive. And so the reason I bring that up was that the height of the 2008 crisis, we lost a number of clients. And you could just sort of sense that when everyone was capitulating and giving up at the same time, you were getting to a market bottom. And so I was convinced that almost the more people that called day after day and fired us, I was more and more convinced that the stock market was bottoming, and that if we could stay the course and buy these extraordinarily cheap stocks that were in our circle of competence, the small and mid-cap value stocks, some of the companies were selling at 2 times earnings, 3 times earnings, 4 times earnings. I just couldn't imagine how those stocks weren't going to play out very well for us if you looked out 3 to 4 years into the future. So to your question was, we were really fearful because clients kept leaving, and you didn't know when the bottom was going to happen. And you just had to keep a belief in your philosophy and belief in your strategy and keep buying things while they got cheaper, because then you knew that when you came out of it, you were going to have the best performance. Because most of your peers were either selling or sitting on their hands waiting for the dust to settle. And they were missing this once-in-a-lifetime opportunity to buy bargains when there was this maximum fear that was there. The other thing, of course, we did is we cut costs dramatically, and that was painful. We had our first set of layoffs in the firm's history. And close to 20 people we had to let go. And our board was very helpful with that. And some of our friends in the industry, like this guy Ned Janata, who still runs William Blair, is chairman of William Blair, where I started. People like that sort of, we sat down in a room and said, we've got to make these tough calls to survive for the long run and to cut to get to where we'd be profitable, even at the low numbers that we got to at the height of the recession.
Hey, Chaz?
Charles Barber, I'm actually a staff member here. I'm wondering what role a company's ethics play in your decision whether or not to invest in them. Are there any particular markets or areas that you'll just stay away from? I know with Fidelity, they got a lot of heat for investing in companies that may or may not have been sponsoring genocide and so forth, and I'm wondering, at what point do you evaluate whether or not a company has some ethical lapses that frighten you?
It's interesting to us, for most of the ethical lapses that people can get in trouble for, there's usually a lot of what I would call black hole litigation risk. And so what we've done is avoided the sectors where we thought the management didn't get it. It could be around the environment. It's interesting, before BP happened, of course, that stock dropped dramatically in the midst of that crisis, and BP had a history, I guess, and a reputation for not being very buttoned up when it came to doing the things that were necessary to protect the environment. And so we always try to tie it together so that if the company isn't doing things the right way ethically, the way BP wasn't, it ultimately is the right thing to stay away from it because there is real litigation risk and downside stock risk. It hasn't always worked. We don't invest in handgun manufacturers. I think I know some of those types of companies have done pretty well as there's been more risk of terrorism and violence in our society. Of course, the tobacco companies we have not invested in because we felt there was unlimited risks there. And with all the legislation that's going on where you can't hardly smoke anywhere any longer, we thought that was a bad place to invest. But ultimately, those stocks have done fine too because I guess there's still so much smoking around the globe, they can still continue to do well from a profitability standpoint. So we've tried to stay away from companies that way from an ethical standpoint, but again, always tying it to what I think could ultimately be real downside risk because of litigation or regulatory reform that could cause the stock price to collapse.
Okay, young man in the suit, thank you for wearing the suit, appreciate it.
Yeah. So I had a question. I was wondering, my name is Adam Zabel, by the way. I'm a junior accounting major. There's so many people out there who are trying to find success in the stock market, and you mentioned your focus on precision, but what are some other qualities that you have or maybe that your firm has that you found sort of differentiated you from the rest of the people out there?
Well, I think that it's our leaders are very independent people, and if you read about, I think most of the great stock investors, they're people who are willing to, what I say, stand alone, to not care what other people think at all. And if you have a lot of people who are kind of yes people who go along with the crowd, follow the trends, get worried about the same thing that everyone else is worried about, get excited about the same thing that everyone else is excited about, that's not the kind of personal characteristics that I think can lead you to be a successful value investor. So I think what we've tried to do is to hire the really truly independent people who've proven throughout their careers and their college environment and business school environment and things they've been able to do, that they can point to significant decisions or thought processes that were substantially different than the way the group was thinking at the moment. And that's hard to coach. I mean, it's hard to find that out in an interview if you're being able to do that. So what we've tried to do is to have a really good summer internship program where people can come in during the summer and we can get to know them. We also do a lot of recruiting with people where we have connections. So being in Chicago, we have a lot of good friends there at the U of C Business School and undergraduate school and the lab school, and try to encourage the professors and the teachers to send us their best students who think independently. And 'cause I just can't think of anything that's more important if you're going to be a successful investor, is that ability to not get swayed by the headlines of the moment. Because everyone says, oh, I'm a great value investor, I'll buy these stocks when they get cheap. But when crunch time comes and the headlines are screaming that the market is collapsing, the economy is collapsing, jobs are disappearing, Kramer's screaming on CNBC, the hedge fund guys are coming on television telling you each company is going to go bankrupt in the next week, it takes a certain real, I don't know what to call, you have to really have strength of character and courage to stay the course when everyone's telling you how crazy you are for doing it. But that's what you need to do to be really successful, I think, as an individual investor or as a part of a fund.
John, you mentioned jobs in particular. Our students out here are obviously going to be concerned about jobs at graduation. The economists right now are estimating that large companies are really cash rich right now. As a matter of fact, as of June, non-financial firms are sitting on $1.84 trillion in cash. And they're not actually going out investing that, making new jobs to any large extent at this point. Do you have an opinion as to what's holding them back? Why are they not creating these new opportunities?
I think these management teams are still shell-shocked by the financial crisis. So many of our companies 2 years ago were worried about their debt covenants, worried about their survivability because their balance sheets have been so weakened. And a lot of them have been weakened because they had made major acquisitions 6 months before the credit crisis hit, or they bought back a lot of stock to please Wall Street before the credit crisis hit. And all of a sudden, when the worst of the worst happened that was unanticipated, they were financially underwater with these imperiled balance sheets. So I think they've overreacted now. As the economies would come back, they've said, I'm going to make sure that we have this extra cushion, real margin of safety, so in case there's a double dip, we won't be back where we were 2 years ago worrying about the banks and worrying about financial viability. So I think that's the cautiousness, this conservatism that's baked in today.
Okay. Since you brought it up, what is your opinion on a double dip recession?
Well, you'll probably continue to hear me talk about Warren Buffett. I could say that, number one, he has been very consistent and more aggressive lately of saying there won't be a double dip. I can say that not only do I believe it because he says so, but I would say 9 out of the 10 companies that we've been talking to on a regular basis, that's my job day to day, is to talk to management teams, visit with management teams, go visit them in their offices. 9 out of 10 are telling you that revenue and earnings and profitability are higher than they thought they would be 6 months ago, 12 months ago. So the enthusiasm and the confidence that's being built up, I think, is real, and that the odds of a double dip are really, really very, very minimal.
Next question.
Hi, I'm Alexa Maldonado, and I am a junior marketing major. And my question for you is, what racial barriers or issues did you have to overcome in order to be a CEO of a successful enterprise?
Wow. I think that a couple of racial barriers that are out there. I think number one is that there had never been an African American money management or mutual fund company in the country's history when we started almost 28 years ago. And so people hadn't looked or thought about hiring a minority-owned money manager or mutual fund manager. And so you had to get these CFOs and treasurers and wealthy individuals to think differently than they had thought in the past. If you think about it, a lot of the minority supplier programs have been around janitorial services, construction, things like that. And for whatever reason, it got started that way. I think a lot of city governments felt if you did it with construction, you could show a lot of success with hiring people, and it would make a big difference. And as you guys know, so much of the wealth today is created in financial services and professional services. I think that's kind of been a big miss. So I think the first thing was just sort of being a pioneer in a field that no one had ever been in was a real challenge. I think the second challenge is, that the society has become more and more anti-affirmative action. There is, Ward Connolly in California, who's led those initiatives to, ban affirmative action in California. Michigan had a similar legislative problem. And that's happened in several states around the country, in several counties and cities. So there really has been a backlash against affirmative action, and I think that has been harmful for us, because whether we talk about being a minority firm or not, when people see me and Melody Hobson, our president, they identify us as a minority company. And I think sometimes, the downside of affirmative action is there can be people who think that we had all of our success because of that, and now that people are against it, they're like, we don't really think they're that good. We don't really think they're that smart, that creative, that visionary. There were some people who benefited. This is a group of people who benefited from a flawed concept, affirmative action. And that's I think, a real problem. What we've tried to do, of course, one of the great things about our business is it is all numbers. So we can show people that we have almost a 28-year track record of being in the top decile. And we can show that since the March 9th lows, we're in the top 1 percentile. And so we constantly lead with performance. I think this last quarter, we're one of the top performing mid-cap blend funds in the entire country. So that helps to overcome some of these maybe stereotypes where people just assume that you're not as good because of that. Last thing I'll say, I saw that at Princeton when I was a trustee there. Same thing was around, the same issue happened to me around athletes. People just assume that the athletes weren't smart. And it was just, they figure you're only in there because you're an athlete. And that's unfair to stereotype a group just because of some of the things that have gone on in our history. So hope that answers the question.
Okay, I think we have a question right here. There we go.
Hi, I'm John Lawler. I'm a senior IT management major. You mentioned that you spend a lot of time talking to managers of companies. What sort of things would you talk to them or try and convince them to stay in your company and stay invested with you when you go and talk to them?
Oh, when I go to talk to them about investing with us?
Yes.
Because I do go and talk to management teams about their companies when I invest in them. And so I do have 2 reasons to go visit CEOs and CFOs on a regular basis. I mean, we start with performance. It's the nice thing about having this, this long-term track record, and we can say that we're very unusual because I've been managing our small cap value product the entire time period. So it's really rare to have that kind of continuity and long-term performance record. So we start with that as the focus. The second thing we try to talk about is our team. We think we have, for a small firm of 75 people, we have a real group of superstars who are real leaders in our community in Chicago, people who've been very successful with what they do, and we go really very deep. It's just not Melody Hobson, our president, who's on Good Morning America, but it's Charlie Bobrinskoy, our vice chairman, who used to run Salomon Brothers' Chicago office for investment banking, and it's Marilyn Kosher, who heads up our mutual fund area. And you go down the list, we have a really deep team. So I try to focus on that, and then to tell potential clients about the unique talents of our team. How hard we work, what we've accomplished, the creativity that we think leads to success. And we think this business is all about people. Then we try to talk about our culture. We try to say how unique it is and the diversity that we have in the firm, our commitment to our community, our focus on thinking long term. Those things that, there was a book that came out called about investment management leadership that said we had the best culture of any money manager in the country. So we've tried to reinforce that culture matters for long-term success. So don't get caught up with the short-term performance numbers, to look at the firm over the long term. And if you create the right culture with the right kind of people, you're going to have great performance coming out for the foreseeable future. Because if you have the right kind of people, even if you've gone through a bad period, if you're competitive like we are, you're going to figure out how to be better going forward. You're not going to sit and just make the same mistakes over and over again. So we think people and culture, what we call it a culture that is constantly trying to improve, to go out and have the best professors come in and talk with us, go out and visit with the top thought leaders who've written the best books or the best articles on investing. So we've brought in everyone from Taleb, who wrote The Black Swan, to Michael Lewis, who wrote Moneyball, who's written a lot of thoughtful pieces on behavioral finance, and top professors who have been behavioral finance experts. So we try to talk to customers about that we're a learning culture that isn't satisfied with where we are, and we hope that works. But it is hard, it's just people are so skeptical, and pension fund consultants that often advise company management teams are often very skeptical. So we have to work really, really hard to sort of overcome that. Again, being the smaller, we really are David versus Goliath. And it's hard to sometimes get people to believe in you when you're smaller.
Okay, I think we have a question over here.
Hi, I'm Betsy O'Neill. I'm an MSA student here. In investing, obviously it's a risky business and mistakes are made. Could you talk a little bit about how you handle mistakes within your firm and what advice you have to us as we go out into our careers, and if we make mistakes, how to recover from them?
I think the first thing is, if you've made a mistake, to not be defensive about it, to always just own up and say, I made a mistake. I think if you do that, everyone sort of takes a deep breath and starts to figure out how to fix the mistake. So I think that's rare. Most people, when they make a mistake, they try to hide it or try to explain it away, and that doesn't help you with your boss. I think it's just better to say you just made a mistake. The second thing, from a management standpoint, we have to make sure that you don't punish mistakes too severely, because then people won't come to you and let you know what's not going well. You've got to create an environment where if someone comes up and tells you that there's a mistake, you immediately move into the mode of how to fix the mistake so that it won't happen again. And I think sometimes bad cultures spend too much time trying to shoot the messenger who's delivered the bad news and make them feel bad, make them feel uncomfortable, place blame. And I think that's the worst thing that you can do. That's what human nature is like, though. It's hard to overcome that. But in a perfect world, you want people to understand that if they've come to you, that you're going to start to work on solutions. Again, not play the blame game. So I think that's the key thing about mistakes. And I think if you can, if people can sense that you're committed to being better. I try to tell people, Saturdays and Sundays, or if you're there, it's going to help you with your career. If people see how hard you're working to be better, to overcome whatever obstacles that might have been there, whatever mistakes have been made, I think people respect and admire hard work and effort and people who are working to get better at what they do. And that's part of the job of I guess, the leadership, is to help point out people's weaknesses and share with them what they can do better, so that people really have something concrete to work toward as time goes on.
Okay, the young lady in a black jacket, please.
Hi, I'm Maura Sullivan. I'm a senior accounting major, and I know you worked with Barack Obama, on his campaign and everything, and I was just wondering what, the greatest lesson you learned from that whole experience was.
Oh, thank you. It was a magical experience. It's been something that you never could imagine possible would happen. That I know you've read some of the stories that Craig Robinson, his brother-in-law, came to visit me when I was a junior at Princeton. Coach Krill asked me to host him that weekend, and we hit it off really well. And he sort of gave me credit for helping convince him to go to Princeton. And whoever dreamed that one day his sister would be the first lady of the United States? It was just unimaginable. I think I learned a couple things. From him specifically, he is the person who is the epitome of calm at all times. I've seen him in, when things were really rough in the campaigns, from the state Senate campaign to the congressional campaign to the Senate campaign to the presidential campaign. He has this unbelievable calm. He sort of soothes everyone in the times of troubles, and that's what great leaders do. It's like Michael Jordan in the huddle at the end of a big playoff game. He's going to be the calmest person there because he knows he's got it and he knows how he's going to get the team to win. And so I've noticed that I would love to have that kind of calm. My friend Arnie Duncan's the same way. It's interesting, they share that ability to have this, they don't get ruffled by all the craziness that happens in the political world. The second big lesson, of course, was that Barack stayed the course during the campaign, which gets to some of the questions we've talked about investing. When things got really rough, I guess it was the summer of, I always forget whether, I guess it must have been '08, when he was way down in the polls and everyone thought it was inevitable that Hillary was going to win. And a lot of his fundraisers were calling and complaining. And I remember being at an event in Iowa where it was right at the height of this really bad time. And all these people were just unhappy and giving him free advice on how to do things differently. I went to a small dinner during that period. It was the same thing. Everyone had all these, new ideas. And he was like, no, I'm going to stay the course. Our strategy that we've developed of saying Iowa is what matters, we're going to stay with that plan. We're not going to get distracted and try to do something different just because the poll numbers are really bad during this period. We're going to stick with our Iowa strategy. We win Iowa, it's going to set the stage for the rest of the campaign. And that took a lot of courage to, when your numbers are low and getting lower and everyone's calling and complaining to you, to stay the course. It took a lot of courage and conviction on his part, which again ties into sort of being a good value manager when the stock market's imploding and everything is bad and your performance is bad. He's actually joked with me that his business is sort of similar to my business, is that he gets poll numbers and everyone thinks that you're failing because your poll numbers are down. Everyone thinks I'm failing if our performance numbers are down. And inevitably, when the poll numbers come back, everyone thinks you're smart again. And then when our performance comes back, everyone thinks we're smart again. It's kind of an interesting thing, but it reinforces the importance of staying the course. And then the final thing I would say that I've learned in being involved with great political campaigns like Bill Bradley's campaign for president, is that the people who have a chance to really participate and get critically involved are the people who are the most team-oriented. Because in politics, so many people who get involved in these campaigns have a goal for themselves. They want to be in the cabinet, they want to get a big appointment as an ambassador, they're got some business interest that they care about. And I find that quickly those people get weeded out and don't end up in the room when the important decisions are being made because they're thinking about themselves first. And if you think about it, going back to what Coach Kirill said, if you think about your teammates first, everybody's going to want to have you in the room if you're there constantly thinking about how can I help this campaign be more successful. And so I always tell people that if you're going to get involved with a political campaign, you're going to have more opportunity to get to the leadership of the campaign and make a difference if people understand that you're there first, thinking about the candidate first. And so that was reinforced for me during that presidential campaign with President Obama.
Okay, question right here.
My name is Brian McKelvey, and I'm an MBA student. I won't ask you about it, but that was a really cool clip. My question is this. Clearly you're a man with many great interests across the spectrum, but also a man with great responsibility. And in a business that can be all-consuming and really competitive, how do you still have to find time to feed those personal interests outside of the office? How do you maintain that balance?
I think that the way for me to maintain the balance, and I'm not perfect at it. I think you have to have a great team to help you do all the things you need to do. You can't try to do everything yourself. A lot of entrepreneurs get into a game, get into a business, and they feel like they've got to make all the right decisions. And I've been fortunate to have people like Arnie or Melody Hobson or other teammates who help me get the job done during the week, and that does free me up to be able to do the things that I might want to do, go to the club and play basketball, or go see my daughter in a play, or whatever it was that was important at the time. So teammates are important. The second thing that's important is how you use your time during the week. So I'm very big, and people make fun of me a little bit in Chicago because I'm always the one that's going to say, okay, we've had enough of this discussion. let's move on to something more important. And I learned some of that from Andy McKenna, who used to be the chairman of the board here at Notre Dame. And he's a great leader in Chicago. He's the chairman of McDonald's now. And I remember once when I went to speak at something he had me speaking at, he told me very clearly exactly how many minutes I had to speak, and that was it. And he was making sure that I wasn't going to waste the board's time that I was presenting to. So I tell people all the time, you can control your time if you are really disciplined about it. And that hour meeting, you can make it happen in 15 minutes. That half-hour phone call, you can make it last 10 minutes. And I think most people don't think about how valuable time is. But if you really are good at trying to figure out what's really important, you'll find out that 90% of the things that go on in meetings are just a waste of time. People talking about stuff that doesn't matter, people get off on a tangent and have 12 questions around something that has absolutely no relevance to anything. And somebody's got to be there to tell them, just to stop it. You know, I don't have time to have us go down this path that doesn't lead to anything that's very useful. So time management is critical. And then the final thing that I do is that I've always tried to have help, too, to help me get around. And even in the beginning, when I didn't have very much money and the firm wasn't making any money, I would have, if I had a busy day, I would get a car to help get me around so that I didn't have to go park and gas up and do all kinds of stuff. It sounds kind of silly, but that allowed me to be on the phone getting things done. It allowed me to read all the research reports and first calls on stocks and books and things like that instead of trying to keep track of all the rest of the things. So even though it was expensive, and maybe it meant that I had to, raise more capital to stay in business, I felt I could be more effective if I really focused my time on where I could make a difference and have someone else helping me do the other things that they could do better than I could do them.
Okay. The Bush tax cuts are due to expire at the end of this year. And if you would like to give us your position and you think whether they should expire or not, that's one half of the question. But the real part of the question that I'd like to have your opinion on, how will that affect the economy if the tax cuts expire or if they don't expire?
I think that it's probably not going to have, I don't think it'll have a big difference over the short term in particular, because it really isn't that great a change that's there. I do think you don't know what's going to happen with this Congress, but you can pretty much bet there's going to continue to be this sort of balance where one party is not going to be able to dominate the other, even after November. And so I think that ultimately you'll end up with some types of compromises around all these issues that won't allow one path to dominate. And so therefore I don't think it'll have any grand impact on the markets. Because I think that, I know that the White House is really practical and reasonable, and they will work together to get to the right long-term plan.
Do we have another question out there?
Well, the Olympic bid is something that I had not thought much about lately, but there's an article, I guess, just today or yesterday in the paper saying it's the one-year anniversary from when all of us in Chicago were shocked that we came in last place in that Olympic process. And I was on the board of the Olympic Committee. I went to Copenhagen with our entourage, which included Oprah and, of course, the mayor and, the president and Michelle came out. It was, I still remember being on the bus. We were on the bus with the group of us that had been there in the morning to make the presentation on the way to the place where we thought we were going to go to celebrate and to hear the announcement. And we're on the bus on the way, and everyone starts getting, BlackBerry notices saying that we had already were knocked out. And everyone was just so shocked. I mean, it was like, it was like almost like you couldn't comprehend that it really happened. Everyone thought there's got to be a mistake, a misprint. We misheard, and it was just sort of this unbelievable experience. And then to see the devastation on the mayor's face and Pat Ryan, who led the Olympic Committee, you felt so badly for them because they had flown all over the world several times, to help make this bid practical. And I think we learned that you have to. It was a process that wasn't as fair as we had hoped it would be. So I think that the people, as you know, the mayor has come out and said he doesn't want to do it again because he felt like he couldn't trust the process. And so I know there's a real commitment to try to improve the process, have more clarity around it so that countries don't spend so much time and money chasing dreams that aren't really possible. I think at the end of the day, we realized we really probably didn't have the same shot that we thought we had, and the people weren't candid and honest with us about how tough it was going to be for us to actually win the bid.
Okay, another question?
Hi, Mr. Rogers. Once again, my name is Andrew Chernesky. I have another question for you about your investment strategy. When you invest in a company, do you have a time frame for how long you plan on holding on to the company for, or do you simply hold it onto the stock until it realizes its full value?
Our goal is to hold it till it reaches its full value. And if a stock is no longer selling at a discount to what we call the private market value and is selling at an expensive valuation, we will start to lighten up the position. It doesn't matter how long we've owned it. But if you look over the 28 years, we've typically had about a 20 to 25% turnover, which implies that we own the average stock for 4 to 5 years. But I have to say, we've owned some stocks continuously for 15 years or more, and a lot of stocks where we might have been in it for 10 years, out for 5, it gets cheap again, you buy it back. So we've had several of those kind of situations where you have a chance, if you stayed in touch with the management and the company, you can come back in. But so typically we're going to own the stock for the long run, but when we make a decision, we don't have a specific time frame. And the sooner it gets to private market value, the better.
As a follow-up to that question, I believe, at least if the newspapers are correct, and I want to make sure that first, historically Ariel has not invested in the healthcare sector, but you are reevaluating that position now. Do you recommend the healthcare sector?
We have been doing a lot more to invest in the healthcare sector. We have a very good healthcare senior analyst who we work with, and so we have a real broad range of healthcare companies. But the one area that's been the biggest newer area for us is the medical device companies that got extraordinarily cheap during all the healthcare reform initiatives and the economic collapse. So companies like St. Jude that works with heart devices, Zimmer that helps you if you need a knee replacement or hip replacement or shoulder replacement. That's been a big growth area. And we think those types of industries won't be dramatically negatively impacted by healthcare reform, and it creates real opportunity to make money while these stocks are selling at historically low multiples relative to their long-term growth rates. So, we loved, again, to buy stocks while people are down on them, and it was a perfect time to build these positions, we think, for the long run.
Okay, we have time for 1 or 2 more questions.
Hey there, I'm Ryan McCarger. I'm a senior accountancy major. Obviously, you've had a lot of great experiences throughout your career, but out of curiosity, what's been your proudest or most memorable moment?
Wow, my proudest and most memorable moment. I can't count it to one. I think getting the Woodrow Wilson Award from Princeton clearly is at the top of the list because it's the highest honor that Princeton bestows, and there's never been an African American to receive it. I was the first person from my class to receive it. And the past recipients have traditionally been senators, people from the cabinet, sort of giants who've created, real giant success in our society. So I felt really honored to have that award. And it was nice because I actually received it in Jadwin Gym, which is where they have the event on Alumni Day. And my old coach was there. So I was able to say in front of all the alumni and the president of the university that Coach Carrill was the best teacher that I'd ever had, and that the values that I'd learned there in Jadwin Gym were the values that had most impacted my life. So that was a real special experience. But I have to say that there was a lot of really neat experiences with this presidential campaign, and the chance to co-chair the inauguration and to walk onto the platform with my daughter and to be right there and sort of to be able to go and see Craig Robinson on the platform and Arnie Duncan on the platform, Valerie Jarrett all these friends that I'd had for more than 30 years were all there to celebrate together this historic presidency and look out over the, the mall, I guess, and see millions of people, watching. So that was, I have to say, that was a really special, memorable, experience that, you'll never forget. So I think those would probably be, the two that, sort of jump to mind. From the business standpoint, is that you don't have those kind of moments, in building a business. It's not quite as having those kind of dramatic things happen when you're picking stocks and doing research. But this idea that we really feel like we've done something special, and we take a lot of pride in the performance that we've had over the long run, but that doesn't have that sort of magical moment the way the inauguration did, which was so special, the Woodrow Wilson Award.
Do we have another question?
Maybe.
Go ahead. I heard someone say something.
Well, one thing I was just going to maybe say one other last thing about teamwork, and it kind of ties into this political questions that happened earlier. I always give the example of Melody Hobson, our president. She joined us as a summer intern. She did extraordinary work, and it's been with us now 19 years. But a lot of her success happened because she was the ultimate teammate when she worked on Bill Bradley's campaign for president. She did everything that Bill asked her to do, was totally selfless in it. And along the way, he ultimately started to invite her on the campaign planes and invite her to help with the debate preps and things like that. And the reason I bring it up was that because she was so selfless, he decided that he really wanted her in the room for all the important meetings. And I know I touched on this earlier, but it also benefited her personally because during this process, Bill was telling everybody he knew how terrific she was. And so one day she got a call from Howard Schultz, who runs Starbucks, and Howard was recommending her for the board of DreamWorks. So she ultimately gets on the board with David Geffen and Jeffrey Katzenberg and DreamWorks. And unlike most of us that go to board meetings, they're not that much fun. She's going to movies as part of her board meetings, and she had this wonderful experience. And then Howard Schultz invited her to be on the Starbucks board. And the only reason I like to bring that example up is because sometimes people say, geez, well, you do all this teamwork stuff, you do all this great stuff, and what good can some good come back to me personally? And I find that Coach was right again, that the more you help your teammates, kind of the more good things happen to you and the team in the long run. And so for Melody, being this ultimate team player ultimately benefited her in a dramatic way, and it ultimately changed her life in the way that she's been able to be a successful businesswoman. So I always think that the theme of teamwork is just so important to reinforce.
Well, I want to thank Mr. Rogers for taking the time to come to us today.